The future of Bitcoin just got approved. After years of speculation, it's finally here. Bitcoin ETFs have entered the financial mainstream. But what does that really mean for investors, institutions, and the future of crypto? In this deep dive masterclass, we'll uncover the true impact of Bitcoin ETFs, the structure, the strategy, and why it could redefine finance as we know it. Before we decode this game-changer, make sure to subscribe for more expert breakdowns on crypto, ETFs, and market evolution. Bitcoin ETFs. Crypto meets Wall Street. What is a Bitcoin ETF? The concept of exchange-traded funds, ETFs, spot versus futures, ETFs. How ETFs work in traditional finance. Why Bitcoin ETFs were so highly anticipated. A Bitcoin ETF is a regulated financial product that lets investors gain exposure to Bitcoin without having to buy or store the cryptocurrency themselves. ETFs, exchange-traded funds, are typically listed on traditional stock exchanges, offering liquidity, price tracking, and ease of access through brokerage accounts. The Bitcoin ETF can either be spot-based, backed by actual Bitcoin held in custody, or futures-based, tracking Bitcoin futures contracts. The road to approval. Years of regulatory battles. The first proposals and rejections. The role of the SEC legal milestones. Grayscale versus SEC. Why the 2024 approval changed everything Bitcoin ETFs faced over a decade of rejections, mostly due to concerns over fraud, market manipulation, and custody issues. The SEC, Securities and Exchange Commission, repeatedly denied proposals until 2024, when pressure from institutions like Grayscale, BlackRock, and others, and court rulings, forced a shift. The approval marks a massive step toward crypto legitimacy. How Bitcoin ETFs function. Custody, liquidity, and price tracking. Authorized participants and fund creation redemption. Difference between spot ETFs, BlackRock, Fidelity, and futures-based products, ProShares, Valkyrie, fees, management style, and NAV tracking. Like understanding the inner workings of markets? Subscribe now and dive deeper every week. These funds work by allowing authorized participants, APs, to create or redeem ETF shares in kind with Bitcoin for spot ETFs. Price tracking is handled through real-time NAV net asset value calculations. Spot ETFs hold actual BTC in custody, while futures ETFs track CME-traded Bitcoin futures. Key players include BlackRock, Grayscale, Fidelity, and ARK Invest. Why Wall Street needed a Bitcoin ETF institutional barriers before ETFs, custody, compliance, trust. The importance of regulatory clarity. Risk mitigation via ETF structure. How ETFs bridge traditional finance and crypto institutions were previously reluctant to invest in Bitcoin due to issues with custody, compliance, and regulation. Bitcoin ETFs offer a safe, familiar structure. They enable regulated investment in crypto through trusted custodians and brokers, bridging the gap between traditional finance and decentralized assets. Institutional adoption. Who's buying? Asset managers, BlackRock, Fidelity, ARK, invest pension funds and family offices entering BTC impact on AUM, assets under management, growth, early flows, and investor demographics. Since approval, pension funds, hedge funds, and large asset managers like BlackRock, Fidelity, and ARK have poured money into Bitcoin ETFs. This inflow boosts assets under management, AUM, and encourages other institutions to follow suit, further validating Bitcoin as a portfolio asset. Market impact. Bitcoin price, volatility, and liquidity. Correlation between ETF launches and BTC price surges, increased demand equals reduced supply, enhanced volatility, or stabilization. Real-world case study. Gold ETF comparison, GLD. Bitcoin ETFs introduce more liquidity and potentially stabilize prices long-term. However, initial launches often drive up demand, resulting in price surges. This mirrors the gold ETF (GLD) effect from the 2000s, where ETF approval significantly impacted the commodity's price and investor accessibility. Bitcoin miners, holders, and the supply effect. How ETFs affect long-term holders and mining economics. Reduced exchange, float, and scarcity effects. Miner selling pressure versus ETF absorption. Changes in HODL patterns post-ETF. With ETFs absorbing more Bitcoin from the market, there's less circulating supply, possibly increasing scarcity. This dynamic affects miners, who now face changing demand pressures, and long-term holders, HODLers, potentially reducing sell-side pressure as ETF demand soaks up supply. Competition between ETF providers. Key players: BlackRock versus Grayscale versus ARK versus VanEck. Fee wars, driving costs down market share dynamics. Future entrants and global competition. Stay ahead of ETF innovation. Subscribe now for elite insights. ETF providers now engage in fee wars and branding battles. BlackRock, Grayscale, ARK, and VanEck all offer different features. Some emphasizing low fees, others highlighting custody security or innovation. As more firms enter the space, competition may drive innovation and cost reduction. Legal and regulatory aftershocks. What ETF approval means for SEC positioning. Next, ETH, ADA, SOL ETFs. Ripple effects across global regulators, Europe, Asia. Privacy tokens and regulation on deck. Bitcoin ETF approval may signal future green lights for Ethereum, ETH, Cardano, ADA, or Solana, SOL ETFs. It also pressures global regulators to follow suit. In the US, SEC attitudes may continue softening, while regulators in Asia and Europe develop parallel frameworks. Bitcoin ETF vs. buying BTC directly. Benefits and limitations of each. Tax implications, custodial risks, and self-sovereignty. Which is better for long-term investing? While ETFs offer convenience, they remove self-custody and limit flexibility. Direct Bitcoin holders maintain sovereignty but face higher technical and security barriers. ETFs may be better for retirement accounts and risk-averse investors, while direct BTC suits crypto-native users. Retail vs. institutional impact. More access for everyday investors, democratizing exposure, or centralizing it. The new gatekeepers of crypto meme traders versus macro investors, ETFs, democratize access for retail investors, but also give more control to institutions. This raises concerns about centralization, as Wall Street may gain significant influence over Bitcoin's liquidity and price action. Still, it creates new on-ramps for millions. Bitcoin's mainstreaming through ETFs. From digital gold to balance sheet asset brand shift. BTC as a legitimate portfolio allocation, crypto in 401ks, and retirement accounts, education and onboarding through ETFs. Want smarter crypto access points? Subscribe and future-proof your investing knowledge. Bitcoin is evolving from a fringe technology to a core asset class. With ETFs, it's being included in 401ks, IRAs, and balanced portfolios. This cements Bitcoin's image as digital gold and not just a speculative gamble. Ethical and philosophical debates. Decentralized ideals versus institutional products. Is ETF adoption a betrayal of Bitcoin's ethos? Big finance controlling a decentralized asset? Pros and cons of mainstream adoption. Bitcoin was founded on decentralization, privacy, and individual sovereignty. Critics argue that ETF adoption compromises these values, as big finance institutions now own large stakes of Bitcoin. Supporters say mainstream adoption is a win for long-term growth and legitimacy. The future of crypto ETFs, beyond Bitcoin ETH spot. ETF, next frontier. Multi-crypto ETFs and DeFi baskets, global growth of tokenized funds, innovations in blockchain-based ETFs. Expect future ETFs to include ETH, DeFi tokens, or even token baskets representing entire crypto sectors. International ETFs and blockchain-based ETF structures are emerging. The next wave could make crypto investing as diversified and accessible as traditional markets. A tipping point for crypto. The launch of Bitcoin ETFs isn't the end of crypto's journey. It's the beginning of its mainstream phase. It brings liquidity, legitimacy, and challenges. How you use this moment depends on your strategy, your convictions, and your understanding. For more guides, insights, and real-world crypto frameworks, make sure to subscribe. Crypto isn't going anywhere. Neither are we. Bitcoin ETFs. Wall Street meets the blockchain. Bitcoin ETFs represent a seismic shift. They legitimize crypto in the eyes of institutional investors, invite regulation, and force re-evaluation of crypto strategies. For investors, it's both a new opportunity and a new challenge. Subscribe to stay ahead of every major crypto breakthrough.